Shares of Twitter dropped 11% in early trading Monday, knocking more than $3 billion off its market value. Some investors dumped their shares after the social media company suspended President Donald Trump's popular account on Friday. Other tech giants such as Facebook, Google, Apple, and Amazon have also taken their strongest actions against Trump to limit his reach. Their shares also declined Monday, but not by as much as Twitter's. Trump had more than 88 million followers on Twitter, and analysts say many of those eyeballs will go away if Trump is permanently banned.
Big tech corporations, Twitter and Facebook, saw their stocks fall 5% and 3% respectively after banning President Trump. Many conservatives, many, I would say, rational thinking people believe that the tech companies have overstepped their bounds in a major way when they blocked President Trump. And this stretches further than even just this. I would say this is like the straw that broke the camel's back, so to speak. Let's get more into this. So, if you're not aware, President Trump was banned on Twitter. He was banned on Facebook, Instagram, I believe Snapchat, several other platforms. And Stripe Incorporated came forward January 11th, said they're going to stop processing payments for Trump's campaign website.
So to the question of, do I believe that this is going to be a negative or positive for Twitter shares? I think that Twitter is going to go the way of MySpace. I think that this stock is going to get clubbed over the head. This was a self-inflicted assassination. Their shareholders will file suit because this is corporate malpractice. These shares are going not just lower, they're going a lot lower. So to me, the trade is not if I short Twitter. It's when do I get the opportunity, perhaps on a counter trend rally, off of a sell-off, we get a lower high on the shares, that I open up the short position. I'm not sure yet.
You're seeing this cascading effect. There are huge business implications, not just the political tie into all of this, but for Twitter, you know, Donald Trump over 4 years, I mean, goodness knows, would wake up in the morning and see what he was saying.
Yeah.
You know, whether it was Covfefe or anything else.
I
that
forgot
abuses
about
from time.
Covfefe. Yes.
See?
Covfefe. Yeah.
Making me laugh just thinking about it. But anyway, no, look, it's serious because he was, you know, using that platform to basically talk about policy. So
looking at this right off bat, we see here the volume is huge. This is a big amount of volume right now, very big. 50 million shares today traded. That we haven't seen 50 million shares traded in a while here. The last time was around earnings, which was published around the end of October. Obviously, we're seeing MACD here definitely in a declining phase. It's actually been in a declining momentum way before this news with all Trump and et cetera, et cetera. And it's been in a declining phase with the MACD blue line. It has been going through this orange line. RSI has also been in declining phase for a while. It's actually approaching now 30 and even 20 here. Bollinger Band, it is out of its Bollinger Band, so it has gotten maybe a little bit oversold temporarily, which is the reason why perhaps we have some algorithms coming in and buying this stock.
A Forbes article with the headline, "Twitter is the worst company on the planet Earth. Here's how to bet against the stock and deactivate your account." After clicking through, the article fades to white and it says, "This page is no longer active. We regret any inconvenience." And then it directs you to the terms and conditions, or you can be redirected back to the main Forbes site. I immediately sent this article to multiple friends, and every single person sent back a screenshot saying that the link was broken. But I knew Forbes was trolling people, and I needed to prove it. So I reached out to my favorite web dev UI expert, Robert Haverly at Twitter, and I asked him what he could dig up. Within about 30 seconds, he sent me this screenshot, which actually shows a retracted fade in 2 seconds. So this is obviously intentional on the part of Forbes. What exactly this was about, I can only speculate, but I knew that there was a troll going on. With the top search in the last 24 hours being Twitter stock price, it made absolute sense that Forbes would be trying to capitalize on that for click.
There's a different risk for Twitter. The risk is that Trump perhaps starts his own social networking platform or moves his content to a different platform, and now they have some sort of competitive pressure to the extent that user engagement for their platform goes down some percentage point. So I would say that you could argue that it's 10% earnings risk for Twitter on the notion that they may have a negative impact on their audience share, and then that could have a negative impact on their ability to draw advertising against their audience share.
The share price for Twitter has gone down quite significantly over the past week. Facebook similarly, albeit to a slightly lesser extent, largely because Facebook is more diversified and less reliant on Donald Trump. Furthermore, it is important to note that there has been some investigation of monopoly power within the tech sector, particularly targeting Facebook, which to some extent is going to contaminate things, but that to some extent is just in the background. So focusing primarily on Twitter, what we can see is throughout the week, Twitter had been trending downwards. This has particularly been the case since Wednesday, however it had been occurring throughout the week before this really came to a head. So we can see there was some negative momentum going against Twitter, which is of course something we need to bear in mind when analyzing this. We need to think about, was this event big enough that it would be negatively impacting Twitter in addition to that negative momentum? And we can see it probably would be when we actually look at the returns.
On Monday, we saw both Twitter and Facebook suspend Trump's account for fear he was inciting violence. But now the shares of Twitter have plunged by 10% at opening bell, which is a $3.2 billion drop from its $53 billion capitalization. Facebook was also down by 4% and Google dropped by 2%. It all came after the riots broke out last Wednesday at Washington's Capitol Hill.
So Twitter stock as of right now, so far today, has dropped by about 5%, but it was as high as 54. Now it's down to 48. So that's about a 10% drop through the course of the week. Let's see, the market cap of Twitter is $38 billion. So they lost about $3.5 billion in market value as a result of what happened this week. So here's the thing. Here's the reason that remember this is one thing you got to remember too. One thing about Wall Street that you may love or you may hate is that Wall Street doesn't care about your feelings. Billionaires don't become billionaires by getting all emotional and caught up in whatever you mad about right now. You watch CNN, you throwing socks at the TV and cussing out, the commentator. You mad about whatever. Wall Street doesn't do that. Wall Street just looks at what's going down and says, okay, how's this going to affect my money?
Twitter is really the only big name that is down meaningfully pre-market, down about 7%.
Right. There are a lot of people who just say, some of the analysts are saying, look, this is going to slow growth. I don't see how it can't. I mean, I think that there are a lot of people who literally knew that the president was the most important person, and you had to keep checking him. And then you had to check people who talked about him. And you just had this endless wave, this web that the president created, and then it was like action and reaction. So I think that the surprise factor of going to Twitter, which was, of course, the president, is gone. I haven't checked. Look, it's just suspended. I've been looking at sports, Carl. I always looked at the president first. Now I'm looking at what's going to happen with the Eagles and their change in management.